It's funny. I was talking with my coach today about complexity versus simplification. So
Mm.
we kind of went through our business, but this was one of the main themes in your book on the investment side of things. So yeah, simpler is better, and avoid complicated, complex strategies. And you talked a lot about that for investing, but if you extrapolate that, globally, I mean, we're talking like in your life, that is a great skill to have and to learn to master, and a great, I guess, a framework to operate life out of.
Yeah,
Business, personal, investing, all of it.
yeah, hugely important. So for me, one of the things that really fascinates me is the way that when you discover a master principle in life, like the importance of simplicity. So think of something like these phrases like the simplicity that lies beyond complexity, right? Where you really deeply become an expert. So this isn't simplicity just because you're too stupid and lazy to figure out how something works. This
Right.
is simplicity because you've really distilled the essence of a particular game. So when you find a master principle like that of keeping things simple, not adding extra complexity, what's fascinating to me is that it runs through so many different areas of life. So you find it in business, you find it in investing, you find it in science. You look at something like Occam's razor, this idea that on the whole, the simplest solution is best. You find it in business when you look at someone like Steve Jobs talking about his commitment to simplicity at Apple. You see it in design, right, where he and Johnny Ive, when they were designing the products at Apple, they had this incredible Zen Buddhist inspired simplicity, right? There was a kind of Japanese Zen aesthetic there of these very simple, pure lines. And so then I start to go off on this wild goose chase, falling down all of these different rabbit holes, studying simplicity and seeing all of the areas it comes up in our lives. And so you see it again and again in investing, right? You see, I would go off and I would interview someone like Will Danoff, for example, who was managing over $200 billion at Fidelity. He's one of the great Fidelity investors in the next generation after Peter Lynch. And I went to visit Danoff in Boston for the book, and I'm trying to figure out his secret sauce. And he's like, "Look, you can really sum it up in 3 words." And he says, "Stocks follow earnings." And he says, "Look, I I I had these, Howard Schultz from Starbucks come see me right before Starbucks went public, and he said I could see the model right there. I could see how much the return on investment was for each of these new cafes that they were setting up. And he said, look at what Starbucks did over the next 20, 25 years. And he shows me this kind of fever chart where you see the earnings growth that was unbelievable. And then you see the stock price growing in an unbelievable way. And then you see the S&P 500 growing in a sort of desultory way, whatever it was, 7, 8% a year over that period. And the earnings for the S&P growing about the same rate. And he says to me, "So what's the lesson?" And I'm like, "Stocks follow earnings, at least over time." And he's like, "Bingo." And he's like, "That's what I figured out." And so that's a very, very simple principle that's not always true, but is, as I would put it, approximately true on average over time. And likewise, then I go off and I interview this great investor, Joe Greenblatt, who had this stunning record over 20 years, where he'd made 40% a year over 20 years, which is just, it's
Oh my
kind of,
goodness.
it's not actually possible. I mean, so basically it means you turn $1 million into well over $800 million. I mean, this is a stunning, so he's this sort of legendary figure. And so Greenblatt, because he's written several books, one of which he wrote for his 5 children, to explain the essence of stock market investing. It's called The Little Book That Beats the Market. And he taught this class at Columbia Business School for many years. So he taught 700-800 students in the value investing program at Columbia, which is the best value investing program in the world, because he tried to explain what it was that he'd done. He was distilling and distilling this down to its absolute essence. And he said, "Look, the essence at the end of the day is that the key to investing is to value an asset and then buy it for much less than it's worth." And he said, "That's it. That's everything." And so again, it's a very, very simple principle, but the execution of it is not easy.